How to generate profits when you expect downside for your assets. This can be done by having a short asset position and selling a binary call on Divergence. We'll explore how it works in this tutorial. First, let's say you short 1 Ether. Your profit or loss is linear. You make a profit if the price is lower than your entry position. You earn the difference between your entry and buyback price. If you fund a Divergence pool with one stable coin like Tether, you are selling a cash or nothing call. At expiration, if the Ether price is below your strike, you get to keep the premium. Otherwise, you lose the difference between one Tether and the premium you collect. Now, let's see what happens when you short one asset and short one cash or nothing call. Suppose your cash or nothing call has the same strike as your asset entry price. If the price is below your entry, your short asset position will be in profit, and you get paid by your short binary call position. When the asset settles above the strike price, you would realize a loss, and you lose a fixed amount of cash in your short binary call position. Unlike selling a standard call, your risk in selling a binary call is limited. Sometimes the risk reward is better when you sell a binary call at a strike above or below your asset entry price. As you can see, this strategy can be used when you are bearish. If your asset continuously moves lower, you can sell a strip of binary calls at different strike prices to collect yield. Anyways, let's remind you that options trading involves risk. This is not financial advice. We hope to see you soon trading on Divergence. If you have any questions, you're welcome to come ask in our Discord or Telegram channels.